All right, good morning, guys. Today is what is today? Tuesday, March 5th. There's a US 30 trade that's coming up here. So here we have before I go over the daily bias, I really don't want to miss this trade. Our daily bias for US 30 is bullish. Give me a second. What is this? This is test and rejection buy. It already validated. So give me 1 second real quick. See. So I'm not in the trade just as of yet. We need to see what zones we have here. So turn on the zones indicator. So we need to see green. So this is perfect. This is a perfect trade. So given this, it's fine if US 30 wants to keep dropping. The next demand zone within a demand zone, because keep in mind, we want to be trading in like demand zones within demand zones or supply zones within supply zones. So that's the point where we're expecting US 30 to come and pick up liquidity. Now we move on to the breakout scanner and look for that crossover buy. So we need here on the 1 minute time frame to get that crossover buy here on the 1 minute time frame. So if I do get that, I will be buying US 30. Again, for the official trades for you guys, use 0.75% risk. Personally, of course, I'm still doing 1% risk per trade. And let me just update this. So we did have any live session yesterday. So no trades for the month of March. Friday, we had two amazing setups and we would have been up 3% just in one day. But price moved so heavily and it was literally like right before news. So, but today, so if US 30 wants to keep dropping, let it keep dropping. And then we'll get that nice entry. So we've already seen where the liquidity is at. So no entry on the 15-minute time frame. This is a valid momentum buy, but that was before New York. So I don't trade before New York session. So nothing on the 15 minutes. So this is the 30-minute trade. And I think I have, what is it? Something at 11. That's fine. And then, okay, so let's start looking at the daily bias. So if your study is dropping right now, I know we haven't gotten that set up. So we are looking for that crossover entry based off of this breakout scanner right here. So anyway, looking at the daily bias for US 30 bullish because the last closure above an SAR was bullish. Daily bias for gold bullish. Last closure above an SAR was bullish. Daily bias of EU bullish, daily bias of the US dollar bearish. So we've already identified the potential trade for US 30. So we are waiting on that to validate. Gold, there's this markup I'd sent in the group yesterday, and you can see price did exactly that. Here, the reason I did that markup, if you apply again the zones indicator, always ask yourself, if they're going to pick up liquidity, where would they pick up liquidity from? And again, we want to be trading in this concentrated zone. So if we are buying, we want those areas where there's more green than other green zones. If you're selling, we want to sell in and around those areas where there's more red zones. So we can see above here, gold created another supply zone within a supply zone between 2140 and 2134. So again, if you get to this point, again, you don't want to sell on impulse. You want to wait for them to mitigate. But anyway, I am bullish on gold, so I'm not really looking for sales unless I see this pattern playing out. So ideally, my nice sell place on gold may be this 2127 or 2120 area, but I don't see us getting that during the live session. I mean, who knows? So no 15-minute entry even with our SARs, but here we have a double SAR here for a buy, but price would have to revisit this zone right here. So yeah, so that's a 15-minute time frame, nothing for gold on the 30-minute time frame to my right as well. So I don't see us having a gold trade today. EU just ends up having like too many SAR zones, so it just gets a little too complicated even marking it up.
Hello, can you hear me?
Hey,
How are you doing, man?
what's up?
I'm good. How are you?
Good. For any questions, just wait until I'm done with the analysis, and then you can ask questions later.
I'm sorry. I'm sorry to disturb.
All right. So for EU here,
Sorry, madam. Sorry.
no
Actually,
no entry on EU. Here this is 456. This is a double SAR, but anyway, again, I said I'm not really going to be trading EU as much, so I don't see any trade on the 15-minute and on the 30-minute time frame. So US 30 can keep dropping as much as it wants. That's even better because we know that it's going to pick up, and you can see the area it's rejecting from now. If you want to enter on impulse, yes, that's an area you would have entered. But for me, I'm waiting for that 1-minute confirmation. But you can see it's coming to our zone. Now, if you have such a big zone here, the impulse entry, sometimes you have to ask yourselves, right? So we can see if I box this zone in and see where the concentration is, it's pretty much that. So if you have any confluences for the buy to enter on impulse, that was it. But for me, I'm waiting for that 1-minute crossover entry, and then I can go ahead and enter it around that place. But so you should be getting it maybe in the next 5 candles or so. Okay, let's go to the 1-hour time frame. 1-hour time frame. No entry, no setup for US 30 unless US 30 drops to around 38,730. So nothing on US 30 for the 1 hour, nothing on gold for the 1 hour, nothing on EU for the 1 hour time frame. Yeah, nothing for EU. We do have this SAR zone. This blue zone is the 1 hour zone, but we don't have any price coming around that zone. And then moving on to the 4-hour time frame. Nothing for US 30, nothing for gold based off of our bias. Because for me, I'm looking for buys on all 3 instruments. But I'm pretty sure if I were to change the settings for sells, there will be sell entries, but I'm not looking for sells on any of these 3 instruments. Also here for US 30, another thing to keep in mind as we wait for that 1-minute crossover. Here on the, if we go down to the 5-minute time frame, we'll probably start seeing those higher lows being created, right? So you remember, one of the ways to see or to monitor that change or reversal pattern, right? So you want to see those high lows being created, and that should also line up with that 1 minute. But for me, the trigger for taking this trade, I'm just waiting on that 1-minute setup or 1-minute crossover to line up here before I go ahead and take that. What other? Looking at the momentum entries, I don't think there was any momentum entries for either buys or sells. So gold on the 4-hour, this momentum buy already was used to push price up to where it is. There's no momentum sell based off of where price is because gold is around the all-time high and there were no SARs that had been created there way back. On the 1-hour time frame, 1 hour. 1-hour time frame, no valid momentum buys. All these buys are invalid because there's no rejection off of an SAR. These sells are invalid. And then we move on to, say, US 30. For US 30 on the hourly, US 30 on the hourly, these buys are invalid. This sells were valid and they got tapped in. So you can see this was a valid sell because the previous 5 candles had rejected off of an SAR. And you can see they tapped that sell side liquidity here. And from there, that's when price went down there. But this happened probably 2 p.m. yesterday. Interesting. I didn't see that setup. Yeah, but anyway, that happened at 2 p.m. Yesterday. Because here you'd have waited for price to retrace to the high of this candle, and then you'd have entered that trade. For us, 50 points stop loss, 100 points TP, and you'd have gone straight to TP. But that was a nice momentum sell on US 30. And remember, for momentum trades, personally, I don't care about daily bias when I'm doing momentum trades. So I can be bullish on an instrument, but if I get a valid momentum sell, I will take the sell. No valid momentum buys based off of where price is on the 4-hour for US 30. Again, this sell was invalid. There was no rejection of an SAR above where price was. So nothing on the 4-hour, even where price is right now. And lastly, Euro USD. Now, momentum entries, I am willing to take momentum entries on EU. I just want to move away from taking SAR entries on EU because sometimes EU moves a little too slow. This was a valid momentum buy on EU, but this happened on Friday. You can see they picked up that. Oh, this was when we were trading on the live session that day. They picked up that liquidity, pumped EU up. Now here we do have a valid, let me see, this sell is invalid, this sell is invalid. This sell is invalid. It wasn't the lowest candle of this move to the downside. So unfortunately, I was hoping that that would have been a nice momentum sell. But anyway, so nothing on EU as well. So for today, it looks like just this one US 30 trade. And you can see we're almost getting that crossover. So you'll see that green X line up. And if we change this back to the 5-minute time frame, you'll probably see those possibly higher lows being created. So you can see this candle. But if you took the trade on retest of this zone like impulse, just follow along. So remember, for our trades, 1:1 risk. Once you achieve a 1:1, you go ahead and set break even. My trades are always 1:2, and you don't always have to wait for me to enter a trade. Personally, it doesn't mean that even the trade that I'll enter will go straight to TP or something. But sometimes I can miss out on a big move. But nowadays I just want to become a little, since we added this confluence of the zones, you get fewer trades over time, but you get more high probable trades. So that's why I'm able to even be risking 1% per trade. And again, this is why I'm not yet in the trade, because that crossover, when we get that crossover, and the crossover is like this green X right here, that will show like a nice reversal pattern. But before then, you might keep getting these manipulations again to the downside. So for me, I'm just waiting on that. Asad, did you have a question?
Yes, I have a question, but that's like not related to this. That is something else. If you allow me to ask that question.
All right, what's the question?
Um, I contact you in the group of Excel. I saw your results in the group of Excel. So I just want to ask that do you use the bot for your trading, or you do the manual trading only?
No, I stopped. I mean, I have my own bot, but even for my own bot, I don't use it as much anymore. I just focus more on manual trading because I make way more profits with manual trading than any robot.
But also for the manual trading, you have to like on daily basis, you have to analyze and you have to see the markets and then you have to take the trades. But
Yeah.
if someone is doing a job, then I think so that the board is better. What is your suggestion? That are you profitable? Are you very profitable with that bot or not? Like I'm just asking you that what was your
Oh,
results when you
well,
were using?
I don't think any bot can be if you're a good manual trader, I don't think any bot can be profitable. If you go here on the manual results, you'll see like the results have been and I post it every day. So the last
Yeah,
time so yeah, there's no bot that's gonna give you, and this was 2 accounts, this was 8K, but anyway, just go, if you open our spreadsheet right here, these are the official trades. So we've been doing live trading since March of last year. So we only had one losing month, which was November, lost like 2%, but every other month was like 3%, 4%, 6%. So you ask yourself, if you're using a bot, are you able to make such returns? So if you're able to
no.
make such returns consistently, then yes, go with a bot. But personally, for me, I'm not really interested in doing robot trading. And given that a lot of prop firms are moving from CFD to futures, a lot of people are not going to be able to use robots because with futures, you can do both buys and sells at the same time with futures trading. But with CFDs, that's how you're able to do CFD, both buys and sells. So most robots, they hedge both buys and sells. With my robot, I configured it. So if I wanted to use my robot for futures trading, I can be able, because my robot is a trend-based robot. And if I wanted also to use a robot with my, okay, there goes that crossover. So if this closes with with that X on the minute time frame, I will be taking a buy on US 30. But anyway, so I talked about how you can use a robot in tune with my manual trading. So I already know my bias for US 30 today is bullish. So what I would be doing if I would be using a robot right now, I would be setting the robot to buys only, and then at like 2 p.m., whatever time, around 2 p.m., I go ahead and close. So I wouldn't let positions run overnight. So that's how I would do a robot right now. I would do it such like I'm manually trading. So I wouldn't like just do both buys and sells and then hold for until TP hits or whatnot. So I would do so like today I'm bullish on US 30. So if I were running, give me 1 second. And I am in the buy for US 30 now. So I'm in that buy on US 30. And I do have some slippage. Give me 1 second. Yeah. So if I was doing that, then I would right now just set it for buys only, and that's it. And like for me, how I trade, how do I trade? If I only trade after New York Open, so like 9:45 Eastern Standard Time to like 3 p.m. Eastern Standard Time. So that's why I'm saying like by 2 p.m. or by 3 p.m., if I were to hit a loss or whatnot, or whatever, whether I'm in profit, whether I'm in a loss, I would close all positions. So that's how I would trade with a robot. But like I'm done trading with robots and just being running positions perpetually until TP hits. I don't think it's sustainable. There are people who I guess make money. I used to make money with it, but I just discovered it's not EA trading is not consistent. If you're really I don't know, maybe to some I guess they are, but I haven't seen proof of people being consistent over time with EAs. So that's just me. So if you're a good manual trader, you can do better than any EA out there. But have I seen, I don't think, and a lot of people who post those EA results, you rarely see people post their payouts. So a lot of people are just demo trading, and then they hold
Yes,
trades.
that's correct.
Yeah,
That's
so
correct.
yeah, so I mean that's a fact right there. So you can once you start doing this for a while, you can start seeing beyond all of these things, and you can tell what is legitimate or whatnot. So for me, honestly, I just encourage people to learn manual trading. If you cannot learn manual trading, yes, there's still ways you can use EAs, but use them in conjunction with like manual trading. So if you know a direction, if you have enough probability to know that a trade might go this way, and you cannot, of course, you can never be too sure. But if you have like 90% probability, like this trade right here. So if I were to get stopped out on this trade, like for me, if I get stopped out, right, this is a 200K account, I would lose 2K. But if I were using an EA, instead of using this stop loss, because my stop loss is 50 points, instead of using like right now, I think I'm using what, like a 40 lot with 50 point stop loss. Instead of doing that, and I want to use a EA, I can say trade with like 5 lots and then still have the same risk. So this one I'm risking 1% of my account value. So with like 5 lots and maybe a step size of 20 points or something, because I'm almost sure that US 30 is going to reverse up later, I can give myself probably an allowance of maybe 200 points. 200 points by just using maybe 5 lot trades and maybe a step size of a step size of what? Step size of maybe 10 points or 20 points. So that way, as much as I can get stopped out of this trade by manually trading, if I'm using an EA and I set it to buys only, and I am correct by the end of the day that US 30, as much as it might stop me out on this manual trade, but if I do like with the EA trading, maybe it does something like this, and eventually by like 1 p.m. does something like this, I'll probably be up like 500 for the day. So it's not the 4K that I would be up if this trade were to go into profit. But 500 is nice. Maybe tomorrow I make 1,000. Maybe the next day I make whatever. So anyway, it just depends. So you just have to know what kind of trader you are. For me, I realized I'm not as consistent as I would have wanted to be with manual trade. I'm sorry, with EA trading. And yeah. But anyway, so this trade got stopped out. So for you guys, 0.75%. So this is minus 0.75%. Man, I feel bad we missed those opportunities on Friday, but it's fine. So for today, this is minus 0.75. And then so for the month, just down minus 0.75. And then I really don't see any other trade setup. But does that make sense what I said or what I talked about?
So
Aside-
my next question is, do you trade on your personal account, or you prefer to trade on the prop firms accounts?
I trade most of my accounts are prop firm. I have personal accounts. Now for the personal accounts, those I use my EA on because it's like long-term trading and I don't really, so I just set them. So if I am bullish on an asset, I'll just do buys only until I change, until the bias changes. But I don't trade on those personal accounts. I don't trade fast-moving instruments. I don't trade gold. I don't trade US 30. So I trade assets that move a little slower. 38,795.
Okay.
38. All right, let me just send this. Um, well, do you have a Profirm account?
Yeah, I do have. I have FTMO, I have Blue Guardian,
Oh, okay.
and I'm doing manual trading with that.
I thought you did. I thought you're doing EA trading. 38,700.
No, I'm doing manual trading. How much was your like maximum profit from any prop firm?
You say what?
How much was your maximum profit split with any prop firm?
Just go to my manual results. You'll see those things.
I'm just asking you. Can you, if you don't mind to share?
I don't know. The reason I don't know, if you watch my videos, you'll realize that I don't focus on monetary returns. That's why even for me here, when I say that I'm taking this trade with 0.75, I don't, if you ask me what 0.75 is, I do not know. I measure my returns based off of percentage.
Mm-hmm.
So if you go to banks will not tell you that we are giving you 5,000 interest a year. They'll give you a percentage. So given that for me, I want to grow this into like a hedge fund in even like 20 years, if you start thinking about too much about money, sometimes you'll be um, and again, I don't know about you, but for me, when I started focusing a lot on monetary returns, I was finding, give me one second. I was finding that I was being so preoccupied with, oh, okay, I need to make 500. But if you do it with percentage returns, it's easier for you. And even if you're talking to investors, because the next part of me is to go out there and find like venture capitalists and get funded with private equity money. You can't just go there and say, oh, I had a payout of 200,000. They'll ask you, what is 200,000 of what? What was your account value, right? So for me, if you ask me, I don't know. I do not know. I don't, money just comes in my account. I don't care. Like literally, when I tell you I don't focus about money, I do not. For me, what I focus on, I want to see so if you ask me in the month of March, how much did you make? I'll say, okay, let's go to the month of March of 2023. And then I'll tell you I made 3.28%. So if you're presenting this to an investor, they can do the calculations on there, and so they can see, okay, if this person had a 10K account, they made 3,200 and no, they made 328.
300.
If 328. If you gave them 100, if they were trading 100K account, they made 3,280 bucks for that month. That is how you present yourself. But you cannot say, okay, I made 3,280. Okay, based off of what? Then you're now working in the opposite direction instead of what you should be doing.
Yeah, I got you. Thank you so much.
But anyway, so this ended up hitting stop loss, but I do see this as a stop hunt. And given that for me personally, most of my what's this? This was indices. I can only do 2 trades a day, given that I risk 1% a trade. I don't see myself taking any other trade for today, and probably that will be it. That's it. Let's see. Mm. me once. I want to see this last thing. All right, what time is it? 9:58. I'll stay on for 15 more minutes. I want to see this because I'm still not convinced that this thing is gonna keep dipping. And given that I have no trade, I have no setup for gold, no setup for EU. So this is a 15-minute SAR zone for US 30. So this might be another setup. So we'll see how this one comes in. But still, see, let me think this through. Let me see how far down. 640. Okay. One sec. So US 30 fully bearish on 15-minute time frame, a little bearish on 30. Gold. All right, let's see what happens here. So if I will take another entry on US 30, it is safer to wait for this 15-minute one, but looking at this 30-minute time frame, based off of, you can see where they picked up if we turn on this zones indicator, you can see they came all the way to the bottom of that box right there. And I don't want this heavy moving candles, and that's the 10 a.m. candle. Let's see. This might be a tricky one. 25. This looks like the Friday move. All right. So here's what I'll do. I'll wait, and I know we waited for the retest of the 9 EMA on Friday, but it didn't come and price went all the way up. And this will be my last trade of the day. So it's still based off of this. However, you can see where they picked up the liquidity from, right? From that demand zone, that's all the way down there. So that's normally how you can tell, like, they're using those supply and demand zones. If you see that that zone is tapped exactly to the pip, you can see the low of this candle came at the very bottom of that demand zone within a demand zone. Only thing is that if this is too overextended, I don't want to enter in on impulse. So I will wait for a retest of the 9 EMA, which is this yellow line. It might keep pumping up like it did on Friday. So again, what we do, so that was the trade I would have taken. But again, right, the overextension. So you guys know I don't trade or I don't take overextended candles. So since I'm waiting for the retest of the 9 EMA, I still want to know where somebody would be setting break even if they are already in this trade. So if this trade gets to this zone first before coming, what I would want to happen is for the price to come back down first, retest the 9 EMA, which is the yellow line, before getting to this point. If it gets to this point, then I will just, at this point, I think I would call it a day, because if this gets to that zone, price would already be at a 1:1 risk to reward, and I would be chasing a trade that somebody is already at break even at. So let's see if it comes down first. And if it doesn't, that's fine. We'll just wait for the next setup. And this will be my second and last trade of the day. Yeah, this was literally, looks like this was stop hunting. Right.
So bro, can I ask you something?
What's up, Ben?
Yeah, so about futures, you were saying what do you think is gonna happen with the prop and futures? Like you were saying they're gonna replace it or something.
No, most prop firms are going to move to futures trading. Because
So
Because if they
Yeah.
don't, they're gonna lose the US market.
Oh.
Because the US market is ideally the biggest market for prop firms. So they would
Hmm.
have to adapt to that futures. This already got to the 1:1. Yeah. So I think that's what's gonna happen.
So does that mean like like Forex is no longer going to be something on prop firms?
It is because
Hmm.
you can still trade Forex even on futures prop firms, if I'm not wrong. Because I know on
Hmm.
so this trade would have already been at a 1:1. But you can trade Forex on I don't quote me on that. But
Hmm.
because I haven't moved to any futures prop firm.
Hmm.
But because I'm comparing it to like forex.com, which is like a US regulated broker, and I know you can trade like pairs, like FX pairs on it. But I don't think you can trade gold, if I'm not wrong. I don't think they have commodities. So they have some FX pairs, and then they have those futures.
Yeah. You know, futures.
Mhm.
I was looking at some of us, and this other guy was telling me, was, you know, futures. Why is it that, you know, future prop firm accounts are much cheaper? Like they're much, I don't know, and apparently it's easier. Of course, it's still going to be, you still need to know how to trade it, but it's cheaper, like to get it compared to a normal prop firm. Like, you know, FTMO, it probably cost
Yeah.
a lot more. Yeah, but futures prop firm is a much cheaper. Why do you think that is?
I mean, is it much cheaper? If I'm
Not
not
like,
wrong,
yeah.
like AP, Apex
Mm.
or whatever, it's like $300 a month or something, right?
Is it
Yeah,
monthly?
yeah, it's monthly. But most of them they give you a discount, like 80. I think Apex was doing like 80% discount.
Mm.
But I don't know if it's perpetual. But you know, for most of this futures, you normally see like you have a 3% overall drawdown. You have a
Mm.
6% profit target, and then the drawdown is trailing. So the more you make money, your drawdown moves along with you. So pretty much like what FT Funded Trading Plus used to
Yeah.
have. They normally used to have that trailing drawdown. So I think it's when people say it's easy, it's only because they have a 6% profit target, but the trailing drawdown is what can catch you, right?
Oh yeah. True.
So yeah, I don't really think it's easier.
Mm.
Yeah.
Yeah, that's true. That's true. I was thinking it can't be easier. It's still gonna be, still requires things.
Yeah, so I think that would be good if they had like the same drawdown as like this other CFD prop firms, but with the
Mm.
trailing drawdown. Because with a 3% drawdown, that is to mean like for me with because I remember the beginning February we had like 3 back-to-back losses. So in
Mm.
like February of 2024, that is to mean I probably would have just blown that account because in
Mm.
February the first trade was a loss, the second trade was a loss. Actually, I wouldn't have. But if you have 3 back-to-back losses and you're risking 1%, so I think the
Oh
good
yeah.
the for the futures, the way to go is to have a lower risk per trade. So maybe do like 0.5% risk or 0.25. Maybe that's the only way to go about it because you can be risking 1% per trade, and then you are yeah. Because if you have just like 3 losing trades or maybe 2.5 losing trades, you're done.
Oh yeah. That's
Yeah,
true.
so I think for those ones, it's just better to take it slow and steady. But we'll see. I mean, I'm done doing challenges, so I'm not even looking to do any challenges. It's just I don't know.
Yeah. You mean like challenge passing like
Any
for
no
yourself,
no. Yeah, yeah, like to try and apply for a challenge. I don't know. It's just
even for yourself, you're not gonna do it.
no, yeah, I'm done. That's why this year I'm only if I'm going to take any challenge, it's gonna be HFT because
Oh yeah.
I don't see the need of me putting in time to make somebody to make 12% in phase one and phase two or 15% because
Mm.
market dynamics change. You see, like
Yeah.
the month of February was a tricky month. So as
Yeah.
much as maybe, I mean, I know we didn't trade in January, but you can imagine if the month of January, you pass the challenge and maybe because, market dynamics were good, but February was a bit tricky of a month. And
Yeah.
for
Yeah.
us to even have a 0% return is good. But you can imagine if now you are in a losing streak in February and now you lose the account and then now you start doing another challenge in March and April, by the end of the year.
Yeah.
Yeah. Or if I were to do a challenge, I'll probably be risking like 2% per trade so that I'm either done with it quickly or I pass quickly. So one of the two, either or.
Yeah. So there's no point doing challenges. So you're just going to be basically you're just going to carry on with the current past
Yeah,
accounts, basically.
because I still I'm just gonna stick to my past accounts. I still have HF, I still have NSF accounts. I still have one FTMO account. So
So
yeah.
altogether, yeah. So altogether, you've got like more than like 5. So it's not really possible to blow them, of course.
No, it is. I lost one FTMO account. I was on holiday, but I was just doing my own stuff. I shouldn't have been trading. Yeah, but I lost one FTMO account because I had two 200Ks. But now I have one 200K, one NSF account. No, two NSF accounts. I actually lost another NSF account as well during the holiday. Yeah. But right now I have like 4 accounts. So that's good enough. Before all this madness is gone. So this trade already achieved 1:1, so no need to look for this. Yeah, but before all that madness is gone, hopefully they're able to come back and give some sort of accounts back.
Yeah. So like Nasdaq, and so like futures. So how many what is it called, instruments can you like trade? So there's Nasdaq. What's the other one? Is it US 100 or something like that?
Nasdaq, I think S&P. Because Nasdaq US 100 is Nasdaq. I don't know if they have US 30. I would hope they have US 30. But I hear Nasdaq a lot. I hear S&P 500.
Oh yeah, S&P 500. Yeah.
Yeah.
What about and the futures they were talking about? Are those prop firms also talking about Bitcoin? Would they allow that? Do you think? If they don't allow gold?
I don't think so. That's a good question. I don't think, I'm just comparing to like what I've seen with like forex.com, which is like a regulated broker, but that's a good question. That might be interesting. Yeah, I don't know. I don't know if they have that. It's a good thing to check with them or to check what they offer.
Yeah. So like Nasdaq, I know you haven't done no back testing on that one, but like on the beginning, if we do start trading that, because I've seen another thing, regardless of the SAR and the session strategies and all of that, I was looking at it as Nasdaq. So that those kind of instruments, when it comes to like the threshold, have you tested that? Because I've realized one thing on each pair. So what do you think about it?
The last time I traded Nasdaq was like last year when I was trying to do those small lots. Before that, yes, I used to trade Nasdaq actively, but it was more of, following signals from somebody. But to be honest, I don't know how Nasdaq moves. I think it's more directional than US 30, I think, as opposed to, it consolidates less than US 30. I don't know, but yeah. But if I were to move and trade it, I would trade it with the same strategies that I do.
Yeah. So like US 30, of course you don't need to just trade you could just trade SAR, well you could trade any strategy, but the SAR is like gives you a really good entry. Like but when we used to do that 500 threshold thing.
Yes.
You remember that one? Yeah. So on Nasdaq, on Nasdaq you haven't tested that, right? So you wouldn't like.
Yeah. It would be a bit, it would be similar. I would do the same, because even when I'm doing the threshold, even when I was doing the threshold on Forex, it didn't matter whether it was okay, it mattered what pair, so like major pairs. But like GJ which moved faster or moved heavier. And I think GJ has different pip calculation than EU, right? If I'm not wrong. So I think it's it's the same thing. I would do the same thing. Given US 30 and Nasdaq are not that much different, because even their pip calculation, I believe, is the same, right? Because they have just one digit after the decimal. So yeah, it would be the same as US30, really.
And Bitcoin is going to be much different, isn't it? It's going to be like into the
Correct. So
Yeah.
Bitcoin would be like maybe
1,000.
500 or $1,000 movement. Yep.
The threshold is that big compared to US30.
Yes, because Bitcoin moves heavy. And I was actually thinking of starting to trade Bitcoin on the live session, but I haven't really back tested it. It's just something I was curious about, but especially given that I love fast moving instruments because you're not really trapped in all of this. Yeah. But I think Bitcoin, when I was trading Bitcoin, I think I was having like a $500 stop loss. So I think it would be maybe, $500 stop loss and $1,000 TP. So I think that was good. But you found a lot of fake outs or a lot of stop hunting. But that was before I was doing the SARs and even the supply and demand stuff.
Yeah, because I've realized another thing. You know, this threshold that you're talking about is regardless if you trade the reversal or not. This strategy, the reason why is the threshold is very important. What I've seen is, on Fridays, how you were talking about that the timing. I think you said, is it that 1 p.m.? So like for us in this country,
like between 12 and 1 p.m. That's a nice time to trade on Fridays.
Yeah,
Or even
that 4 hour time. Yeah.
Because by then the manipulation has because even if you look at gold on Friday, because I can imagine a lot of people are trying to sell between 9 a.m. and 12 p.m. But look at what happened 12 p.m. So even here at 12 p.m., if you already started doing those sales, at least you could have made from 21.19, it went all the way to 21.10. So that's like a 90 pip thing. But here, right, anybody was trying to sell before 12, you can see here you just got burnt by every candle.
Yeah. Exactly.
So yeah, like that Friday move, I think it's always better to wait. I mean, we had some, on Friday we had those nice trade setups at 10, but the volatility at 10 came in so heavily and pushed price up like so bad. But other than that, like is just better to wait for like a 12 thingy.
Yeah. Exactly.
Yeah, I want to see how this goes. Yeah, go ahead.
Yeah, so with Nasdaq, I think that's going to be the next thing we need to start looking at, especially if you're looking to trade those kind of prop firms. So I think we need to
Let me see.
maybe look into that.
Hunting offer. I don't know what it's called, but I'll just say US30 futures.
Yeah.
Maybe they have instruments here. Let's see. Products. No, it's different.
Well, this DX trade. This is just a new platform, isn't it?
Oh yeah, that's just a trading platform.
Yeah. They should just all of these brokers, they should just all move to CTrader, isn't it? I think that would be much better.
I think even US traders able to trade on CTrader. I was watching somebody today who said US traders can't even use CTrader or something. I don't know.
What the hell is wrong with America? Why did they always do that to the US like to US traders? Like, what's the thing against? There's something seriously against the US traders. What do you think? Like, they don't
I don't know.
allow you guys.
I think the MetaTrader thing was just as a result of because MetaTrader is a Russian company, and there's like a lot of sanctions that were triggered for Russia like what, a month ago or something. So I think it's just part of the sanctions. And given that MetaTrader was like the biggest one, so of course right, if that one starts to fall, then a lot of vendors who use that, I don't see the programs there. Yeah, so I think it was triggered by that those sanctions on Russia, and then it just became like a slippery slope.
Exactly. But the other problem is, the leverage. Another thing is, all these US brokers, for example, they only allow you guys to have like 1 to 30 leverage. What do you think that
Yeah.
is?
And when it comes to money, I mean, it's a good thing because with this, it's both a good and bad thing because with a US
Yeah.
broker, it's hard for you to blow your account, your personal account, because you'll
True.
get margin called like way before and you still have like a good amount of capital. But like with
Yeah.
this other unregulated traders, you know, they will let your account even go into negative. So I think it's both a good for a new trader, it's good. But
Yeah.
the thing is, as much as you might keep getting margin called, you know, a new trader might keep going back to the market, and eventually you can argue, because I was part of that, you know, you end up losing your whole account either way. So I guess the
Yeah.
question is, do you lose your account over time, or do you lose your account just in one go?
Exactly. Because you know when you're that kind of leverage, you can only risk how much? You can only risk so much, and once you go into a drawdown,
Yeah, you don't
then
have any more leverage. Yep. Yeah.
these guys, man, they're all trying to just make the money from. I mean, it's
See.
all a business, so
Foreign. So looks like they have foreign exchange futures.
what's that?
Mm.
Is that the same thing?
Like Forex.
So they
Mm.
do have it.
Yeah, I think they would. Yeah.
Mm.
Let's see. What can you trade? Equity, I
I don't
think
know.
equity futures is like Nasdaq and US 30 or something. You know what? No, you can trade, you can even trade US 30 with them. I'm sorry, because now I remember there's this guy who I used to follow who has a group and he trades US 30 and he's been doing US 30 futures. Yeah, so you can have that.
Yeah, you could trade US 30, Nasdaq. But what's the
Yeah.
other one? You know, silver. Have you ever looked at that? What do you think about silver?
No, I've never traded silver. Well, it moves pretty much like gold, so
Apparently, it's the same as gold. But what I think with silver, that means at this point, you know, USD, anything that got to do with the USD, I think will affect silver as well.
yeah, because it's
Yeah,
X, you know, what
XNAG.
XAG USD or something.
Yeah, that's it.
Yeah. Let me see here. Maybe I'll wait for this hourly 740. Yeah. I was hoping to get this move right here, but it's going a little too slow. But
Yeah, another thing, you know, the like we got what is it? The Fed chair. This guy's going to speak again, isn't it?
oh yeah,
Tomorrow
tomorrow.
and, and Thursday. When this guy speaks, I think, yeah, that's another thing. You know, like heavy news weeks.
Mm-hmm.
Another thing I've realized, even the LS guy and these guys were talking about it, I
Mm-hmm.
was looking at it as well. I was seeing, and I think you do know already, but you know, on Fridays, like on Friday that just went,
Mm-hmm.
each Friday, what you do is, if you see that there's heavy news, whatever news it is the following week, what you do is, on that Friday, you need to expect, like in this country, so in the UK, around 3 p.m. is what time for you? So that would be like
3 p.m. is minus 8 hours, I think. So like what's 12 minus 5? 7, is
I
it?
think so. So if it's 3 p.m., I think for you guys, I think you're like 4 hours behind or 3 hours. Is it 3 or 4? Right now, wait, right now it's 3:20. So what time is it for you right now?
10:22.
Yeah, so around 20, so around basically your 10 a.m. Yeah, it's like 10:20 in your country, right?
Mm-hmm.
A.m. A.m. Yeah. So when it's 10 a.m. for you, there's usually that manipulation in the price. You see that the price will go the other way on Fridays. I've realized.
Oh, like on Friday. Yes, I
Yeah,
see
yeah, yeah.
that. I see what you said. Yeah.
Yeah. That happens. You need to expect around 9 to 10 something will happen. 9 to 10 for you. So 9 to 10 a.m. for you something will happen because then following week when there's heavy news, it has an effect on that Friday. It looks like they do a move on that Friday as well, right? And then
Mm.
and then around when you said around your the evening that 4 hour candle that comes when you said around your one is it one what is it one
Like 12 p.m. or 1 p.m.
yeah 12 p.m. or 1 p.m. for you, yeah, then there's the other move. So yeah, you're right about that. So I was looking at it, that heavy news that will come, you need to expect there will be something happening on Friday, right?
Mm-hmm.
Yeah, that's what I've realized. That's another thing. And another, of course, we know this already. You know, the Fed chair, especially when they speak, when that news comes, Fed Chair Powell speaks or testifies.
Mhm.
I think he messes with the what is it called, the interest rates, isn't it?
Yeah.
Yeah. So I think you were talking about, you know, the daily bias.
Mhm.
Since like let's say we don't want to look at all this interest rates, and we don't want, like, let's just say, like, most of us, we don't really care about looking at it. It's not that we don't care, it's just that you can't really always be bothered, right, to go and look on the thing and check where the interest rates are, if it's going up or down, right?
Mhm.
So to make it even more simpler, and if you just look at it technically, like you said, how you always look at the daily bias, right? So right now I think
Mhm.
the daily bias is bullish, right? So
Mhm.
to make it even more simpler, we need to do is just look at the daily bias, because think about it like this, right? You know, the interest rates. If he puts it up or down, whatever way he puts it, I think the interest rates are going down, right? So the daily bias is bullish. So based on that, gold will keep going up. So if he was to put it down and the daily bias, and if he was to put it up and the daily bias was bearish, we would go down. Do you get it?
Mhm.
Do you
Yeah, I
see?
see what you mean.
You see what I'm saying? Yeah,
Mhm.
because I saw same thing happen like in was it in October in 2023, just like a few months ago.
Mhm.
We had, was it Fed Chair Powell? I think it was Fed Chair Powell. Was it? Yeah, I think it was Fed Chair Powell's speech. We had it in October. Yeah, yeah. And then remember, it went from 1929 and it dropped to the 1800s.
Oh yeah, yeah, I
Yeah,
remember. I
yeah,
know what you
yeah,
mean.
yeah, yeah.
Yeah, yeah,
Yeah,
yeah,
that one.
yeah.
Yeah, so that's how you look at it. I was thinking, why the hell is this guy always talking about daily bias? And then I looked at it, I was like, yeah, he's definitely right.
Yeah,
He's
if you
not
look
saying
at
something.
that, yeah, if you follow
Yeah,
that,
yeah, yeah. I was
yeah,
thinking, why is he always saying
it's a nice,
daily bias? Yeah, and then
yeah.
I was thinking, oh yeah, yeah, yeah. No wonder why. And then so I was looking like that. So if you just look at it in a technical way, like you always talk about technicals, and it's true. I was thinking, yeah, that's actually, it makes sense. Like you can't always be bothered to go and check the interest rates and everything. Like you haven't always got time. It's not that we don't want to. Like you don't always have time, right?
Yeah, yeah, you don't. Yeah, yeah, you're right.
Yeah,
And if you look at those times, like most of the times, even during that manipulation, they'll drop and get liquidity from somewhere, either from like a daily SAR zone, maybe the last one, or
yeah.
maybe even this supply and demand zone. So you'll see it tap exactly in there and then reverse so heavily.
Oh yeah, yeah, yeah.
Also, given tomorrow's when, so today, yes, today definitely a lot of manipulation. I forgot about that because tomorrow
Yeah.
is when we have that FOMC with a press conference. So if tomorrow, if the FOMC is slow, then NFP will be fast. If
Yeah, you mean the Fed
FOMC,
chair?
yeah. Oh no, no. Oh,
Yeah.
this is just testify. Oh, I thought there was like FOMC. Oh, so this is just testifying, and this is at
Yeah.
10 a.m. Yeah, tomorrow
Yeah, I don't know. Yeah,
there'll be
I
a
don't
lot
know
of.
how this. Yeah, how dangerous do you think this one is? This is the, like
No,
I've seen it last year,
price will just be going up and down, and then all of a sudden it's gonna spike in one direction.
and then tomorrow, and then on Thursday, same thing.
Friday.
Yeah, yeah.
Friday is
But we have it on.
NFP, right?
Yeah, yeah. Thursday we have the same news. I think Fed Chair Powell again. That testifies again.
Oh yeah, at 10 a.m. and then Friday. Yeah, that's
Yeah.
something.
Fridays, you know, the NFP, you were right again. So I did of course, we've done the back testing now for quite a long
Mm-hmm.
time, but with NFP, 9 times out of 10, it will do the reversal. Either on Friday, the only time I've seen that it hasn't done it was in November last year. You know,
Mm-hmm.
November last year, well,
Mm-hmm.
it didn't do the reversal on US 30 and gold. I checked it. I don't know about the FX. I didn't look at EU and GU, but on the gold and US 30, I realized last November 2023, it didn't do the reversal. But what you need to anticipate with NFP is if it doesn't do it on Friday, because I remember you took a trade and you were taking the trade, but you took it based off of the SAR, right?
Mm-hmm.
So you were buying. I think you were buying. It was a sell. If you looked at the reversal, it was definitely a sell because it always does a reversal on NFP. It was
Mm-hmm.
meant to, everything was meant to sell off, but it didn't sell off. You took the buy before the live session and it went up, but then it came back and it hit your
Break
break.
even.
I mean, yeah, break even. You didn't lose, but yeah.
Mm-hmm.
So you still made profit. You were basically in profit, basically. So what you need to anticipate is if NFP doesn't complete it, the reversal on that Friday, then you need to anticipate that it will do it on the Monday. That's how it
Yes.
works.
Yep.
Yeah,
Yep.
yeah,
Yep. Yeah, that's true.
yeah,
That is true.
yeah. So yeah, and another thing you could do is, you know, with the sessions strategy and the daily high, the previous daily high and daily low.
Mm-hmm.
If let's say, for example, yeah, like today, I think today it did work again. So what I've realized is any heavy news days or weeks, right? What you can do is, because you know the sessions and the daily high, daily low, previous daily high, daily low, it's a very
Mhm.
simple strategy, because you know how it is, isn't it? You're just waiting for one of them to break. You're looking for
Mhm.
the break of structure, right? So
Mhm.
if you're just waiting for break of structure, um, all you need to do is, if there's heavy news days, like even tomorrow or Thursday, or if there's CPI, FOMC, whatever, you should only trade the London session. So you know the Asian range, right?
Mhm.
You just wait. You need to wait for that to break in London. And based off of that, if it breaks for 30, 40 pips, whichever, on gold, you might break for like 40 pips. On
Mhm.
EUG, you might break for the same. US 30, maybe more. And if it breaks for a lot, it's much better, because that break of structure, that's what you need. So once it breaks, you know the high of Asia, if London breaks that by a lot, right? If it breaks the
Mhm.
high or the low, if it breaks the high or the low of Asia by a lot, in London, you get in and you'd put your TP around that high or low to get it that was broken.
Yeah.
And you can just trail it for another 30 pips. That's what I've realized, and it works really nicely. Now, sometimes it might not go for that 30, 40 from the break of the high or low. So all you need to do is, from where the price broke of from the high or low, you
Mhm.
put your TP around the entry or 10 pips below that high low. You get it?
Mhm.
Yeah. And that's what I realized. So sometimes
So
you can
pretty
get too
much, what's his I think LSF, he be doing that as well, like using those
yeah.
sessions.
Yeah, sessions and daily high, daily low. It works really well because it's very like clear as well. But there's certain times it might not
Mhm.
work, because even he talks about in his tree. If you do the back testing, you will see, you know, the fair
Mhm.
value gaps. Have you done the back testing on the fair value gaps?
No, I haven't.
Yeah, so like it's very simple. You would know exactly. You'd probably do it even better than we would. But the fair value gaps is very simple. What he was talking about as well, he was saying go to the 1 hour, the 4 hour, and the six
Mhm.
hour. And what he says is basically, if you look at it based on the higher time frame,
Mhm.
the fair value gaps on the higher time frames, of course, like just how you say, you know, the zones on the higher
Mhm.
time frame are much more powerful,
Y-
much more stronger. So
Mhm.
if there are fair value gaps on the higher time frame, and you see a fair value gap, all a fair value gap is, you know, it's a three candlestick pattern. You already know that, right?
Yeah,
So
yeah, correct.
yeah. So basically, the low, if it's bullish, right? The
Mhm.
low, the first candle at the bottom will have a wick at the bottom, but no wick at the top. And even if it does have a wick at the top, it'll be very small. And the middle candle is the one which has the gap, right?
Mhm.
And all a gap, what we mean by a gap is, you know, the top, the wick at the top or the bottom. If
Mhm.
it's bullish, think about it, right? If it's bullish, right, and there's three candles, right? The
Mhm.
first candle will have a wick at the bottom, but no wick at the top. The middle candle might have wicks. I mean, whichever, it doesn't really matter. But
Yeah.
the third candle at the top won't have a wick at the bottom, but a wick at the top. And within the middle, you can see there's a gap. Now, all the gap is showing is, of course, all it just means is basically there's a lot of buyers because it's
Mhm.
bullish. And on top of that, it means that price will continue further up. And another thing is, you know, when he was talking about wick fill, remember wick fill?
Yeah.
Yeah, Wickfield. So all that means is it's kind of the same thing, but what he looks at is, you know, the candlestick, either at the top or the bottom, has not been filled in, right? So the
Mhm.
price will have to come fill it in. I'm sure you've heard of that before, right?
Yeah,
So that's
yeah.
that's yeah, that's all. That's literally what he looks at when he's taking all these trades. All of these things is what he takes into mind. But sometimes what I've seen him do as well, and I've realized it kind of makes sense as well, but it's kind of risky. But I
Mhm.
think he knows what he's doing. But I haven't tested this one yet, but it looks it looks quite good. What he does is, you know, when he buys, sometimes he looks at the London high, right? So
Mhm.
let's just say there's the London high. You'd It would make sense, right? If New York came and broke the London high, right? You would take a sell. But he doesn't do that. What he would do is he would wait for London high to get broken and he would buy. Like what do you think that is for? So I'm thinking,
Uh, mhm.
yeah,
Yeah, because
I'm
I haven't
thinking,
I haven't looked at that one. Yeah, yeah, but I see what you mean.
yeah. I think what he looks at it, he looks at it based off of like what's it called? Uh what is that called? Because you know, yeah, this is another thing he does. You know the 5 minute time frame. he
Mhm.
puts he always looks like a 5-minute demand or supply, right? And he uses
Mhm.
that and he does those quick 30 pips. I mean, that it's a good way to trade, but it's like very like it's too much scalping. Like it's not for everyone. Like for us, I don't know. Like it's not for everyone.
Yeah, definitely. Yeah, scalping is not for everyone. Scalping needs like that quick
Yeah,
execution and focus.
yeah. It needs and it requires so much like like mentally like how the hell are you doing 3 lots like that and then you have to get in and out. And it's not that you can't do it. I think you could do it. I think I could do it, but it's just so much like you have to sit on the chart. Like we can't always like personally, I can't always sit on the chart and just look at it like all the time because I've got so much stuff to do. But I think because he's sitting on the chart, there's certain traders, they're just sitting there all day or nearly all day or however long they can, and they could just look at it.
Well, I mean, he can also maybe he has like times he trades. You see, like for me, I only trade, between 9:45 and ideally 2 p.m. And mostly like if I don't get trades during the live session, most times I'm not gonna come back to the charts. So maybe for him it's like the ICT silver, because I know he's been applying some ICT concepts. So same thing about the ICT silver bullet. When you have those hours, it's like, I don't know, between 2 to 3 a.m. or something, or between I think 9 to 10 a.m. So I don't know, maybe that's what it does. So I mean, you can say that he's on the charts like a lot, so maybe he's just found that, oh, this happens
That's true.
during this time or during this time.
Yeah, that is very true. That's true. You know why? That is definitely true because I've realized, he doesn't sit on it all the time. I don't think he does because he goes and does whatever he does. But in general, there's some people that will just sit there and scout the whole day.
Oh yeah.
Yeah, they'll be just smacking it. But it's not for everyone that can just sit there and just
Oh yeah,
put your
scalping is it takes a lot. It
yeah
takes a lot. Yeah.
yeah. It's too much. Even if you know your strategy and stuff, it's just so like in your head, you're just gonna be so like it's too much. It's just too long. Can't be bothered.
But anyway, man, I have to drop off. I have to join something else, but
Yeah.
yeah,
All right, bro.
I was waiting for this to come in, but anyway. All right, bro.
All right, bro.
All right, peace.
Tomorrow.